Here's a call for 2024 that we have to talk about. S&P 500 down 86%. The Nasdaq down 92%. Housing to crash 50%. And why not throw crypto in there, down 96%. Over the last couple of days, folks, I've shared with you some thoughts about 2024 from the bulls. I thought I would share with you some data I have collected from the bears. Also today, we got core PCE for Q3. Tomorrow, we will get PCE for the month. But core PCE for Q3, 2%. What is the Fed's target? 2%. What was the expectation? 2.3%. There's a lot of talk, a lot of debate, even on this channel, about what is going on. What will cause the Fed to cut rates? On one side of the camp, you have a collection of folks that say unemployment is going to spike. We are going to enter a nasty recession. And that is going to be the thing that causes the Fed to pivot. Cut. Now, to be clear, over the last 60 years of our economic cycle, that is absolutely correct. Usually the economy runs into a ditch, unemployment spikes, and you get the Fed to react late. I have come out and shared with you repeatedly, and it's a very dangerous opinion to have because I'm saying this time is different. If you've been watching this channel and this journey for 5 years, I very, very, very rarely say this time is different. In fact, I built the 53-year spreadsheet, which we give away on my site, One Rental at a Time. If you haven't got it, go get it. And I use that spreadsheet to call the housing market correct the last 3 years. Transaction crash, the bottom is 3.8 million, no price deterioration nationally. So in that argument, I said, this is not different. We've been here before. So sitting here saying that I think the Fed is going to cut for different reasons does not make me feel good, doesn't give me confidence, but it is what I believe is happening. I have gone back and I've adjusted for inflation and I'm looking at what's coming, the base effect, shelter rolling over, as we've talked about. I believe inflation will come down quicker than expected. I believe the expansion or the stricter policy will force the Fed to cut without unemployment rising. We shall see. We'll know if I'm right as the guy on the island or everybody else is right in the next 4 to 6 months. The first cut will likely come between March and June. There seems to be pretty solid agreement. It's that window. So if unemployment stays below, let's call it 4.5%, and inflation comes in and it's sub 2% by June, I'm guessing the Fed will cut. What we got today, core PCE for Q3, 2%. It is falling faster than people expect. It is not deflation, it is disinflation. Again, we have talked about for the last several years that core PCE is the number. We also know the Fed has told us repeatedly that 2% is the target. Well, congratulations. At least for Q3, you have hit target. 2%. It is already there. Yeah, I feel good about my opinion. I know saying this time is different is very, very risky, but we are where we are. In addition to that, we got Q3 GDP revised. It went down from 5.2 to 4.9. I believe that is the final, so it will go in the books at 4.9. This is real GDP growth, right? If you put in 4.9, you subtract 2, you get a growth of 2.9. Again, that's core, not headline. But again, very important to understand, in my opinion, that the numbers are really starting to go the Fed's way. We'll know tomorrow. Tomorrow PCE will be interesting. Will it once again exceed expectations, meaning lower? We shall see. I look forward to that print. Home sales. So we got existing home sales yesterday, and thankfully they went up to 3.82. So my bottom call at 3.79 stands. I dug into the numbers a little bit because they came out right as we went live yesterday. 19% of homes last month, so call it 1 in 5, went for over list price. The days on market is up to 25 days. I was hoping we would get days on market over 30 in this cycle. Now that rates are falling, I'm not sure that we will, but we shall see. Home sales under 750K, we lack inventory. This is something we've talked a lot about, median and below. On top of that, even NAR, right, National Association of Realtors, who judged this report, said high end has had more concessions. Folks, when you hear about people talking about the percentage of price drops and all of that stuff, please realize they are not telling you the full story. As we have said on this channel repeatedly, if you want to get a deal in this market and you're lucky enough to have the ability to shop in the luxury market, inventory is stacking up. If sellers got to sell, they got to sell. This is the time, if you have the means and the ability and you want it, to shop for luxury properties. Again, you're seeing a lot of discounts above the median. And the farther you get from the median, like we've talked about all year, the greater the discount could be. Some good news underlying the data, 31% of transactions last month, so about 1 in 3 were first-time home buyers. That is up from 28% the month before, so up 3 points. All cash buyers are down 2% to 27%. And finally, investors / second home buyers were 18% of the market. Again, one of the things we've talked about on this channel, as rates went up, first-time home buyers would have their pick because investors can't cash flow. They can't find deals. Now that rates have come down, it's going to be a little bit more of a competition. And again, I think the spring selling season has started. We will see that hopefully in the December numbers, which will be reported the third week or so of January. Let's talk about consumer confidence. Consumer confidence is important because, again, we are a consumer-based economy. If the consumer is like the citizens of China, who is scared about the future, who feels like their retirement, aka second homes, is falling in value, you retreat. The economy shrinks. You get true deflation. That is what appears to be happening in China. What is happening here? Well, consumers are getting more and more confident. Again, these numbers I'm about to read off, they shouldn't mean anything to you, but watch the degree of the miss and the direction. That is what is important. So, consumer confidence prior, meaning last month, was 101. And by the way, the higher the number, the more confident, the lower the number, the less confident. So, last month, 101. The expectation was 104.5. So there was an expectation that the consumer would get more confident with gas prices coming down, rates coming down, unemployment being strong. Actual, again, 101 to 104. Actual was 110.7. Let's talk about Harry Dent. So yesterday I think I gave you a bull case. Let me give you what Harry Dent is saying. Harry Dent is saying that 2024 will be the year of the biggest crash ever. Worse than the Great Recession, worse than the Great Depression. It is going to be of epic proportions. These are Harry Dent's calls for 2024. I suggest sitting down because some of these numbers, actually all of these numbers, are interesting. First, let's do the S&P 500. Harry Dent expects the S&P 500 to fall 86%. 86. Not to be outdone, Harry Dent thinks the Nasdaq will fall 92%. How about crypto? Crypto will fall 96%. And of course, what about housing, aka real estate? Well, Harry Dent doesn't have anything good to say about housing. He thinks housing will crash 50% in 2024. We are going back to 2012 price points. I don't know what you guys think of these numbers. They certainly seem outlandish, unreasonable. But hey, if I'm going to look at the bull side, we should look at the bear side and see what everybody is talking about. Let's talk about a couple things that's going on. Southwest airline pilots. Looks like they got a 50% raise over the next couple of years. Yes, airline pilots getting 50% bump in pay. Let's talk about Morgan Stanley. Morgan Stanley says the next couple of inflation prints will be sticky, but after that, they will get better, and it will lead the Fed to cut in June. Kind of what I think as well. Again, remember, this next inflation print will be sticky because the base effect is essentially zero. The next one is actually quite large. Bird, I don't know if you've heard of this. This was a scooter company that has filed bankruptcy. Shocking. You can't make money renting scooters to people in areas. This company was once valued at $2.5 billion. They are now bankrupt. Folks, this has to happen. We have to have inefficient use of capital being used going forward. And then finally, folks, I wanted to read you the list, at least the current list and the current order of all of the speakers at our event in Las Vegas. Again, this is February 17th and 18th. We have no tickets, general admission sold out, VIP sold out, but you can buy the virtual session for $99 and I will give you the recording once it is done. I do not know why lots of people have signed up. I think we've done 26 or so tickets. Again, here is the order. We're going to kick off with, actually, you know what? First, I want to know from you in the comments below, who are the speakers you are looking forward to seeing? I love them all, but you tell me who you're looking for. So here we go. We are going to kick it off with Jason and Jen Pritchard. I thought it was very important to start the session with a couple, a husband and a wife, who burned the boats, went all in. We could talk about how it was at the beginning, how they struggled, and of course where they are now. I could not imagine starting this event with a better couple up on stage. So Jason and Jen Pritchard. Followed by that, Brian Adamson. Brian Adamson is an out-of-state investor who lives in Florida, invests in Detroit, and is a part of the channel. Next up, Sean Cannell, the CEO of Think Media, has agreed to come out and talk to the community. Next up will be Adrian Hernandez, again, a millionaire that is on the channel. Followed by Beth Traverso, a top 1% agent, somebody who started their real estate career working in hospitality and house hacking. Great presentation. Love what Beth does. That ADU guy, Derek, has agreed to come out and share his hands-on experiences building ADUs, JADUs. If you're not there to see what Derek is doing, you are missing out. We will, of course, bring up the lending trio of Matt the Mortgage Guy, Conway Home Loans, and Velocity Mortgage to talk to you and answer mortgage questions. And then closing out day one, the uneducated economist. Yes, folks, Simon has agreed to come out. We are actually communicating about the event. So Simon, the uneducated economist, will close us out day one. Folks, that lineup right there is worth hundreds of dollars, and that is only day one. Day two, we are going to kick it off with the one and only Coach Carson. Yes, folks, Chad Carson from Small and Mighty Investors will be there to kick off day one. We will then bring up the legend TYLG. Ty will be there to talk about his 30 years experience. We will, of course, bring Dan Bird. I know a lot of you love what Dan Bird does on Sundays and his midweek updates that he did for us. He will be there taking your stock and questions and the like. We will have Bo Eckstein there. I know a lot of you are looking at franchises, buying boring businesses, doing all of these things. We got to have Bo there. We will then have Casey from Brick by Brick. I love the fact that she started her journey doing Etsy things and building up her side hustle to have a down payment. We will then have Lance Lambert, yes, from Resi Club Analytics, giving us all the data, all the information about what is going on in housing. And the creme de la creme, the final presentation will be the four Avengers, Millennial Mike, Dion Talk, Lumberjack Landlord, and myself. Folks, 99 bucks. All of these presenters, you can get the time slots on Eventbrite. It's time to buy the tickets. They will sell out, fingers crossed. And I hope to see you there. And again, remember, you're going to get the video after. And then the last thing about the event, of course, they are, it's audience participation. The audience will be asking questions. And then finally, this number 6. I wrote 6 on the board because I don't know how to say this. My subscriber count growth has really slowed down. So I would like to ask a favor. I love all of the loyal listeners. Lots of you come for the daily financial news. Stick around to watch what the other millionaires are doing. Do me a favor. Please share one video today with 5 people. Ask them to take a look. Ask them to subscribe if they like it. If you could help us grow the channel, that would be wonderful. I appreciate each and every one of you. But if you can just share one video today with your network, with your friends, I would greatly appreciate it. I know we are trying to help people move the needle forward. I believe we are doing good work. If you believe that also, please share. Thank you very much. I appreciate it. Happy holidays. Have a great day. Keep doing the work. Bye.